Assalamu alaikum students, your instructor Abdul Rafi here, and today we are going to do the theory part of the companies from AS level accounting. So let's get started. Make sure to take notes and understand the concepts very carefully and the definitions that we are going to discuss. Okay, so basically we understand that we have a capital structure of the companies in which is made of two parts, two components, that is shares and reserves. Okay, so today we are going to discuss about the reserves in this short video. So you need to understand that we have two types of reserves, that is capital reserves and revenue reserves. But the most important thing is that what is actually reserves. So basically reserves are the amounts or the funds that are retained by the company for different purposes. Okay, so let's write it down. The funds, or you can say simply the funds that retained by company, or the amounts retained by company for different purposes. Okay, for different purposes. And what can be those purposes? So maybe it can be to strengthen the financial position for future prospects. Okay, so there can be future prospects of the company, they need to do the profits from there, and it can be for future expansion plans. So these are the funds that they retain, they keep in the business for the future purpose. Okay, it could be to improve the financial position, those things as well. So now we have two types of reserves in which we say that there are capital reserves, and the examples of capital reserves are, that is basically the share premium, that is very important. So we have capital reserves example as share premium, and the other one is revaluation reserve. Okay, we'll talk about these in detail now. So there is revaluation reserve as well. And if you look at the other side, revenue reserves, so we have in revenue reserves we have the retained earnings, one of the main important ones. We have retained earnings, we have the general reserves, and sometimes in the couple of questions they talk about the asset replacement reserves as well. Okay, so we have assets replacement reserves as well, that also falls in the category of revenue reserves. Okay, so we have asset replacement reserves. Now let's talk about what are revenue reserves and what will happen based on the revenue reserves. Okay, so revenue reserves, in which we say that this is basically retained earnings. So from retained earnings you are paying your dividends, they are used for your paying for your dividends. These are the reserves that are generated from the profits of the company. So retained earnings is basically the profits that you put back in the company again to finance the running of the company in an effective manner. Okay, so ये जो पैसे होते हैं retained earnings के, वो आप वापस कंपनी में put back करते हैं, they are kept safe for running daily expenses of the company. If we talk about the general expenses, general reserve, sorry, if we talk about the general reserves, we need to understand that general reserve is basically for bad days of the company, which you keep for expansion purpose and for like the bad purposes. If something bad happens, so you keep those general reserves if safe, so that they can be used for the expansion purpose, or some unexpected amount came up, unexpected expenditure come up, so you can put their general reserves there. And asset replacement reserves are basically kept if you have to buy an asset in the near future, so that when the old assets will dispose of or they will be inefficient, so you have the funds to get the asset replaced, and that is why it's called the asset replacement reserve. It is the amount that you set aside by the company so that it has sufficient funds to buy the new asset when the old one is disposed of. Let's quickly recall again. If we talk about the retained earnings, retained profits, they are basically the leftover profits which will help company to finance the running of the company in an effective manner. Similarly, if we talk about the general reserves, these are basically for the bad times of the company, in which you have like an unexpected expenditure comes up or something like that. So you must have sufficient funds available to combat a problem that might come in future. Okay, if we talk on the other side, what is share premium? Okay, so share premium is basically a capital reserve, and capital reserve, the main definition for capital reserve is the amount that we generate through the non-trading activities. Okay, so this is basically from non-trading activities, the amount that we generate for capital reserves. Okay, so this is capital reserves are those which are generated through non-trading activities, and they consist of share premium, which is basically selling your shares at a higher price than its face value and par value. So we'll do the numerics of that as well, but at the moment you need to understand that share premium is basically when you sell the shares more than the par value, the face value, or the nominal value. So when you are selling at a higher price, you get share premium there. You get the share premium, and then you record it as a capital reserve. Then if we talk about the revenue reserve, students, so we need to understand that, sorry, revaluation reserve. So basically the revaluation reserve, it is the amount that is generated when the assets are revalued over and above their net book value. So if you have the assets, the non-current assets, and you are revaluing them over and above their fair value, the net book value, that's basically when the revaluation reserve comes in. And that is how this is the structure for the reserves. Basically, reserves are the funds that are retained by the company to strengthen the financial position and provide for the future expansion plans. And then you have capital and revenue reserves. We'll talk about their numerics and how do you solve them in the next video. Thank you. Assalamu alaikum, students, your instructor Abdul Rafi here. Now today let's discuss the concept of dividends and how do we work on them, what is their meaning, and how to solve numerics on dividends as well. Okay, so dividends is basically part of the company accounts. And so what is actually dividends? So we need to understand that dividends are basically the profits that the company needs to pay to their shareholders. Okay, because if the company makes successive profits or continuously profits in couple of years, they are liable to pay the dividends to the owners of the company, that is actually the shareholders. So we can write it down. The definition becomes that dividends are basically profits that are paid to the owners of the company, that is shareholders. So profits that are paid to shareholders. Okay, this is basically from the distributable profit. So some profit you have to retain in the company in form of retained earnings, but then some of the profit is distributable as well, and they have to be paid to the owners of the company, that is the shareholders. Okay, so dividends can be paid in three forms. There are three main things in dividends. So one of them is the interim dividend. Okay, so we need to understand that interim dividend means that the dividends that is paid during the year. Okay, so we can write it down that this is paid during the year. Interim dividend is basically the dividends that are paid during the year. Okay, and final dividends are basically paid at the end of the year. So at the end, we can write it at the end of financial year when final dividends are paid, that is basically called the final dividends. Okay, and proposed dividends are basically, they have the concept from the annual general meeting. So in the annual general meeting, the directors will decide what should be the percentage of dividends or what should be the dividend per share for the next year. Okay, so if they have declared the dividends but not yet paid. Okay, so this is very important terminology here that I'm using. If they have declared dividends and if they have proposed dividends, which means you don't record it because we haven't paid for it and we just mention it in the notes. Okay, so they are mentioned, this proposed dividends is mentioned according to the IAS 10 International Accounting Standards. We just have to mention what is the proposed dividend that the shareholders might expect to be paid on this particular their shares contribution. So that is what proposed dividend is, that the dividends are declared but not paid. Okay, so dividends are declared but they are not paid, and that is what we can say are the proposed dividends. Now, couple of important things that can come and that can be technical and critical as well. So is basically what is the factor between the dividend per share and the rate of dividend. Okay, so what do you mean by rate of dividend and what do you mean by dividend per share? So sometimes in the adjustments that we do for the statement of changes in equity, let's write it down, the SOCIE is the statement of changes in equity. We need to understand that sometimes the examiner says, or it's the policy, the directors say that we will pay dividend per share. When it is written that it is going to pay dividend per share, it means that we are going to find dividend by multiplying by the number of shares. Okay, the amount of shares. Okay, so we can say by the number of shares we are going to multiply whatever the number of shares are there in the case of dividend per share. So let's take an example. We'll give an example. Let's say that we have been given 100,000 shares. Okay, 100,000 shares are there of the company, and they are at the rate of the par value, the face value, which means the share की जो price है, share value is basically, let's say 0.5. okay, one share cost 0.5, or this is the face value, par value, and the directors decide that the dividend will be, it will be per share, it will be something $0.05 per share. Okay, so it will be $0.05 per share. So how do you find the shares, the dividends? How will we find the dividend, students? That is very important. So we are going to say that dividend is going to be 100,000 shares, the number of shares, into just the dividend per share. Okay, so what is the dividend per share? That is 0.05 per share. The company has decided that they will pay. So eventually the dividend comes out as 100,000. You can use a calculator here and get the answer for that. It comes out as $5,000. Okay, so here you go, the answer. This is one of the important example. Okay, whenever you have dividend per share, you just multiply by the number of shares. So the keyword here, students, I'll just highlight it, is basically the number of shares. Okay, so the keyword here is basically the number of shares. If we talk about it further, we need to understand that the other example, the rate of dividend. Rate of dividend means a percentage. So let's say it says that we are going to pay the dividend of 10%. Okay, so dividend is basically 10%, the company says. So this will be applied on the amount of shares. Okay, we need to understand that this will be applied. If they say that it will be a percentage, just remember like this: if it's a percentage, you have to apply on the amount of shares. Okay, so what will be the amount of shares? Let's say it's the same example, just I've given you more information of 10% dividend. So we can simply say that it's going to be, first you find out the amount, that will be 100,000 shares into $0.5 per share. So that is basically the amount, students. That is basically coming $50,000 as the dollar value of the shares, and this is the amount of shares, and then you just multiply with the percentage of dividend, that is 10%, and this is how you get the dividends in the other case. Okay, 50,000 into 10%, that gives you $5,000 as well. So in both cases we are getting dividends as the same, the dividend value is same, but this is a different technique. Okay, you need to understand, you need to make sure you differentiate between what is the number of shares, students, and what is the amount of share. Number of share means that whatever the number of shares outstanding by the company issued to the shareholders are, हम उस पे multiply करेंगे, and amount of share means the dollar value. आपने पहले par value को you have multiplied with the number of shares and then you apply the percentage. So rate of dividend is the percentage in simple terms, and dividend per share is basically the value, per share value, what the company is offering. Okay, so that is a little bit concept and understanding of the dividends. Hope everyone got it and their concepts are getting more clear in the company chapter. Thank you.